your future chartered accountants, and I hope you all are doing great. So, last class we started with the chapter on bank audit. I hope you all have revised what was done till the last session. So, we ended up with this topic, auditor's report. Do you all remember? We also learned the 4 points. Can anyone write to me in the chat box? What are the things that auditors need to require in case of making a report to the central government in case of nationalized banks? Can someone write to me in the chat box? What did we all study? That in his opinion, the financial statement present true and fair affairs of the bank, isn't it? And if he has asked for any information explanation, whether they have been provided and whether it is satisfactory or not. Second point, whether or not transactions which have come to his notice are made within the powers of the bank, isn't it? Whether or not returns received from the offices and branches have been found adequate for the purpose of his audit. And the last was any other matter which he considers should be brought to the notice of central government. Do you all remember it or not? Write to me in the chat box, dear students. Do you remember it? Can we proceed? Anyone, any doubt? All right, okay. Coming to the format of audit report now. See, what actually happens is that both the auditors, the branch bank auditors and the central auditors, okay, both of them have to ensure that audit report issued by them complies with the requirements of standard on auditing. See, because auditors have to follow SA, isn't it? So both of them, whether it is a central stat auditor or a branch auditor, both of them have to ensure that they comply with the standards on auditing. And as mentioned in chapter 8, what did we all do in chapter 8? The format of independent auditor's report, isn't it? There we done the introductory paragraph, then the responsibilities of the management responsibility of the auditor, and what all are they required to mention. Then the paragraphs. Okay, the same format is followed here also. Okay, and they say that the auditor should ensure that not only information related to number of unaudited branches. Now this the central auditor will make sure that not only the information regarding the number of unaudited branches are mentioned, but also their advances, their deposits, their interest income in case of unaudited branches also they have been mentioned there. Okay, they say such disclosure in the audit report is not only in accordance with the best international trends, but also provide useful information to users of financial statements, because even if it is unaudited, they get to know about what are the advances, what are the deposits, what are the interest. Okay, because maybe the constituents are depositing their money or taking loan from the branches which are unaudited. See, what happens is, if the advances, the quantum advances given by the bank is very small, the RBI says that it can be excluded from the ambit of audit. They do not require to be audited. Okay, are you understanding this point or not? If the quantum of advances is too less to be audited, the RBI exempts that bank from being audited. Okay, so there are two kinds of bank, one which are audited and which are unaudited. So here they say that information regarding the unaudited branches should also be reported properly. It is the responsibility of the central stat auditors. Okay, okay. Then they say it may be noted that in addition to the aforesaid, the auditor of a banking company is also required to state in his report the matters covered under section 143 of the Companies Act. Now, what is section 143 of the Companies Act? It states the powers and obligation of the company auditor. Okay, powers like right to access the financial records. Okay, call for information explanation. And what are the obligation? Report on internal financial controls and frauds. So all these are powers and obligations which are mentioned under section 143 of the Companies Act. Okay. However, it is pertinent to mention that reporting requirements relating to company's auditor report 2020. Do you remember it was not applicable to banking company? Who all remember the exceptions? Who all remember the exceptions? Can someone write to me in the chat box? Do you remember banking company was one of the exceptions of Caro? Isn't it? So they say कि Caro reporting is not required here. Okay, so this is what they are trying to say. Is this much clear to all of you, dear students? Is this much clear to all of you? Can we proceed? Archal Singh, which point you did not understand? RBI responsibility, second point. Okay, Archal, we will see to it. Just let us continue with this, and before we end today's session, I will take up that query. Okay, Archal, is it clear? Okay, all right. I have proceeded, Archal, so I will take this responsibility second point before today's session ends. Okay, I will remember, but if I forget, please remind me also. All right. So coming to the next point, that is long form audit report. Okay, I have got a format for you. Long form audit report. I will just share it with you. Is my screen visible, dear students? Okay. All right. Just a minute. See, here is the format of long form audit report. Is it visible to all of you? Okay. See, this is the LFAR, the LAFAR that we talk of. See, what are this is the proper format. Here is the particular on the left hand side. Then is the observation of the chartered accountants. And the last column is the compliances by the bank branch. Okay. So see the first point they have written regarding the cash. First they cover the assets, then the liabilities. So that ways it goes. Okay. See the cash. Does the system ensure cash maintained in an efficient joint custody? Okay, have the cash balance at the ATM being checked at periodic levels? Does the branch generally maintain and carry cash balances which vary significantly from the limit? I told you a bank is required to maintain certain limits. So they are asking, does it exceed the limit? So the auditor is required to answer these queries in a form of yes, no, and with a statement that yes, the bank exceeds the limit on which date did it exceed the limit. So the date mentioned, the amount mentioned. So this is how it is to be filled. Okay, insurance cover available for the branch. Okay, so here the auditor has written the insurance is not dealt at the branch level, it is dealt at the head office level. Okay, so where the balance confirmation certificate obtained in respect of outstanding balances at the year with regards to balances with Reserve Bank. Okay, see. So these are the questions regarding the reconciliation also. Then they have question regarding money at call and short notice. Then regarding investments. See, the assets are being covered. So in respect of purchase and sale of investment, has the branch acted within its delegated authority having regard to the instructions and guidelines? See, can you see some of the answers are also written? That it is not dealt at the branch level, it is dealt at the head office level. Are you able to see advances? They ask. Okay. That the branch, in your opinion, has the branch generally complied with the procedure instructions of controlling authority of the bank regarding loan applications? Whether the borrower account of the applicable interest rate is correctly fed into the system. I told you that you just can't rely on the system. You have to check whether the rate of interest fed in the system is being correct or not. Isn't it? So this is what all you have to check. I told you when the account become NPA, when the loan is not being repaid, it becomes NPA. The advance become non-performing asset. So the auditor has to see whether a correct rate of interest was charged or not. Okay? See, it is a very, that is why it is called long form, because it is actually long. I will show you the headings. See, asset classification and provisioning norms. They ask whether they have been complied with properly or not. Then SMA 1, SMA 2, standard, substandard, I told you all these things. See, then comes liabilities side. Liabilities, deposits. They ask, does the bank have system of identification of dormant and inoperative accounts and internal controls with regard to operation of such accounts? Students, are you able to see other liabilities, sundry debt deposits, etc., bills payable, contingent liability? Regarding the profit and loss account also, see, they ask if the bank holds some kind of gold, bullion and security items. Books and records, see whether there are software systems used at the branch level which are integrated with the CBS. I told you CBS, core banking solutions, isn't it? In case the branch has been subjected to IS audit, information system audit, whether there are adverse features reported and have the direct or indirect bearing on the branch accounts and are pending compliances, compliance by the branch. See, inter-branch accounts. Then there is a topic relating to fraud also, that whether the auditor come across any frauds detected, classified, but confirmation of reporting to RBI is not available. So this is a general format of your LAFAR. See, they are related to foreign currency also, that whether the branch deals with foreign accounts or not. Okay, and at the end there is a place, date and signature of the auditor with the seal, and also a UDN has to be mentioned. UDN I told you in the last chapter, isn't it? Unique number which the auditor puts. All right, so did you all see the format of long form audit report? See, you are not required to see to know in detail what is it. Once you become a chartered accountant, you will automatically fill your long form audit report, but just the general idea of how the LAFAR actually looks like, what are the general questions they ask, what are the observations of the CA, how does he write to them, what are the compliances to be made by the bank. So all these I've showed you just for your general information. Okay, all right. So now coming to our content, let me stop share this. All right. Coming to our long form audit report. See, what does it say? It says the long form audit report as per statutory requirement. Why do we need to prepare the long form audit report? Because there is a statutory compliance, isn't it? There is a statutory compliance. See, I will show you one more thing. Are you all able to view this? Students, are you able to view this handwritten notes? Please let me know. Write to me in the chat box. Are you able to view the handwritten notes? Okay. All right. See, long form audit report. Why is it required? Because it is required by the terms of appointment. See, what happens is immediately when you get the appointment, you don't say, yes, I'm coming for the audit. No. You you have to give the consent in writing. Okay, and there are certain requirements by statutory requirements by RBI. Okay, so first of all, when you are appointed, you are required by the terms of appointment to file this long form audit report, because your fees that you get for audit also comprise of the filing of long form audit report. Okay, one is for your audit and the other for filing of your long form audit report. So they are two separate fees. Okay. Second, they has to mention, they say you have to report basically regarding any fraud to RBI. They say that RBI has issued circular for implementing the recommendations of Committee on Legal Aspects. What happens actually? There is a committee, we call it COLA in short, but it is Committee on Legal Aspects, which is related to any fraud that has happened. They tell that any fraud which has happened in the bank, the auditor is required to state the same. So they say that RBI has issued a circular on the recommendation of this committee. What is the committee? The committee is Committee on Legal Aspects of Bank Frauds. Okay, which is applicable to all scheduled commercial banks, excluding reserve regional rural banks. Okay, excluding RRBs. So they say RBI circular issued for implementing recommendation of Committee on Legal Aspects of Bank Fraud, scheduled commercial bank except RRBs. Now, what have they to state? They say if accounting professionals, who are accounting professionals? The auditors, we, the chartered accountants. They say if find any susceptible to fraud. Susceptible to fraud means if the auditor smells that there is something which can lead to fraud, susceptibility of fraud, there is expected to be some fraud or any fraudulent activity. They find that this activity, there has been a fraud in the bank, this much cash is not there. They state that in the books they have this much cash, but when we went for the cash too, we actually go and count the cash in their chest. Okay, their cash book says that the cash in hand is rupees 1 CR, but when we counted, there was something else. Okay, so they say that this has to be, they say it's a fraudulent activity, or they smell any foul play in the transaction. The auditor can smell with his experience, he knows that there is something going wrong. He studies the balance sheet, he asks questions to the bank manager, and if the bank manager is unable to reply, he's beating around the bush, he's able to quickly judge that there is something foul going on in the transactions. There has been some transactions which were not in the limit of the bank or which were not properly authorized by the bank, not dealt with properly in the bank. So he has to refer the matter to regulator. Who's the regulator? RBI, Bankers Bank. Okay. Then, any deliberate failure on the part of the auditor shall render him liable for action. Then the RBI will take action against the auditor. Why? Because he was required to mention and bring to the notice of RBI all these matters relating to fraud. What are those matters again? Susceptible to frauds, anything which was susceptible to fraud, fraudulent activity, or he smells any foul play. All these three matters, if any of them the auditor comes across or notices or observes, he should bring to the notice of RBI. And if he doesn't do that, deliberately means he knew about it and he did not inform RBI, he is liable to be taken action against. Okay? All right. Next, they say here what happens is, auditor, we have learned the ethics, we know the fundamental principles, we say confidentiality, auditor is expected to require confidentiality. What does confidentiality say? It said that you, auditor, you are not going to disclose confidential matters of your client, but there were exceptions when it is the liability of the auditor or when required by statute or law. There were two exceptions to it, isn't it? They say when required, when the liability of the auditor and he has obtained prior consent of the client. Do you all remember these things or not? Okay, so then they say SA 250. What is SA 250? SA 250 is consideration of law and regulation in audit of financial statement. So they say that this confidentiality, it is overridden. Okay, they say this SA 250, the said standard explains that the duty of confidentiality is overridden by statute or law or courts. Means here the auditor can't say RBI, no, I'm zipped. I will not disclose any fraudulent activity happening at the bank because it is confidentiality. I'm an auditor. I will not disclose confidential matters of my client. No, you have to disclose because here your duty of regarding confidentiality is of no good use if you do not get RBI, let RBI know about the fraudulent activities happening at your branch. Are you understand? So they say that law and statute overrides the duty of confidentiality. So here the auditor has to tell confidentiality part, no, no, no. All right. You will not say that I will not disclose the matter. You have to disclose. All right. Then SA 240, what does it say? Auditor's responsibility relating to fraud in an audit of financial statements. 250, consideration of law and regulation. 240, auditor's responsibility regarding relating to fraud in an audit of financial statement. So here also they say, auditor, it is your responsibility that if any fraud you come across while the audit of financial statement, you should bring to the notice of RBI. Okay, so they say that it is your duty. What does 240 say? It states that the auditor conducting an audit in accordance with SA is responsible for obtaining the overall objective. What was the overall objective? Reasonable assurance that the financial statement taken as a whole are free from material misstatement, whether caused by fraud or error. Isn't it? Can you all recall all these things or not? Yes, dear students. They say it's also to be noted that auditor is not expected to look into each and every transaction. What does it mean? It say that when you go as an auditor to the bank, what will you say? What do you think? How many entries must have been passed at the bank all through the year? Huh? Thousands of entry, lakhs of entry. So is the auditor required to check each and every entry? No. But yes, he has to evaluate the system as a whole. There also he will do sample selection. Okay, he will take big advances, large advances. He will see to, okay, show me some files where you have disbursed loan. Are the documents complete? Have you obtained the debtor and the stock statement? If you have given a working capital loan, let me look if you have hypothecated a property. Are the papers of that goods with you? If there is a property mortgage at your place, let me see whether the papers related to the sale deed, conveyance deed, is it kept with you or not? So all these things as an auditor you have to verify. Okay, so they say he has to evaluate the system as a whole. Therefore, the auditor, while performing his normal duties, he was normally doing the audit, he comes across any instances, he should report the matter to RBI. Okay, in addition to, he may also report it to the managing director, CEO of the concerned bank. Is this much clear to all of you, dear students? Is this much clear to all of you? Did you understand the story? We will take up from the study material. But till now, is it clear to you all? Okay. All right. So see, what does it say? My content is visible to all of you, right? Okay. They say, reporting to RBI. The RBI has issued a circular relating to implementation of recommendation of committee on legal aspects of bank fraud applicable to all scheduled commercial banks excluding the RRBs. Okay. Regarding the liability of accounting and auditing profession. Who is auditing professional? The chartered accountants, the auditor. Those who are in practice. Okay, the chartered accountants who are in practice and they have a firm, either sole proprietor firm or they are into a partnership firm. Is it clear to all of you who can perform this bank audit? A CA in practice, not in job. Do you all know a CA in practice is only authorized to put his sign and put a stamp, the stamp of his firm, either sole proprietorship firm or a partnership firm. Okay, all right. So he is the auditing professional. He is here, the professional is the chartered accountant in practice who is the auditor. So what is he required to? If an accounting professional, whether in the course of internal or external audit or in the process of institutional audit, finds anything, number one, susceptible to be fraud, or any fraudulent activity or acts of excess power or smells any foul play in any transactions, he should refer the matter to the regulator. Who's the regulator? RBI. Okay. Then any deliberate failure on the part of auditor should render himself liable for action. He will be taken action against. Okay, RBI will take action against the auditor because he was paid for this work and he did not do his duty diligently and properly. Okay, all right. As per the above requirement, the members shall be required to report the kind of matters stated in the circular to RBI. Now, what are the matters stated here? Auditors should also consider provisions of SA 250. What are the provisions of SA 250? Consideration of law and regulation in the audit of financial statements. You can write there that confidentiality will be overridden. Okay. He has to speak because he is required as per law. So he has to speak. The exception to confidentiality will come into play here. Okay. All right. Then SA 240. What is 240? Auditor's responsibility relating to fraud in an audit of financial statements. If in his normal course of audit he comes across any fraud, okay, any material misstatement that has led to fraud, so he has to get this into the notice of RBI. Okay, whether due to fraud or error, he will report it to RBI. It must be noted that auditor is not expected to look into each and every transaction, but to evaluate the system as a whole. Therefore, if the auditor, while performing his normal duties, comes across any instance, he should report the matter to RBI in addition to chairman, managing director, CEO of the concerned bank. Is this much clear to all of you? Show me a thumbs up. Write to me in the chat box. Okay. All right. So let us proceed. Now coming to important question, that is conducting an audit. You could be asked in the exam the stages, because this is what? This is nothing but stages, or a question like initial consideration by the statutory auditor in case of a bank audit. Initial consideration. What has he to see? I told you that as soon as the appointment letter comes to you, the next day you will not say, yeah, I've come for the audit. No. The auditor is required to give the consent, submit few documentation, okay, few certificates that he is not indebted to the bank. For example, they say that suppose there is a bank near your house, you stay in suppose Delhi, New Delhi, okay, and you stay in New Delhi, you stay in New Delhi near any area, say Rajouri, okay, for example, or what is Connaught Place, a famous place there. Okay, Connaught Place there in Delhi, and there is a bank, say Canara Bank. Okay, and you have taken loan from that bank. You have become chartered accountant. You have become the auditor. Okay, you are the auditor, and you have been given a letter from Canara Bank to do the audit of Canara Bank from where you have taken loan. Are you understanding the concept? So they say that if you are indebted to the bank, if you are indebted to the bank, if you owe any money to the bank, you cannot be appointed as auditor of that bank. Maybe you are the one who's not repaying the loan, and you will never say that it is like, and the bank manager will not show it as a non-performing asset. Are you trying to understand that? So they say you are not indebted to the bank. You do not owe any money to the bank. So if it happens, you get a letter that you are appointed as an auditor of Canara Bank, so you will immediately refuse the acceptance. You will not accept it. You will say, no, I'm indebted to the bank, I cannot accept it. Are you understanding this? So you should not be indebted to the bank. Number two, there are two kinds of audit in case of bank. One is the concurrent audit and one is the statutory audit. What do you mean by concurrent audit? Every month you are doing the audit of a bank on the monthly basis. Okay, it happens that 7th of the next month you have to submit the report to the bank. You, as a auditor, you go to the bank every day. Okay, and you look to the transactions. Internal audit, you are doing the internal audit. So if you are internal auditor of the bank, you cannot be the statutory auditor of a bank. What does statutory audit means? You do it once in a year, annual. Statutory audited is annual audit, and concurrent is monthly audit. Are you able to understand these two concepts? There are two kinds of audit. One is concurrent audit, which is a monthly audit, and one is the statutory audit, that is the annual. You do it once in a year. Okay, starting of April. So if you are internal auditor of, suppose, Canara Bank, you cannot be internal the statutory auditor of Canara Bank. So if you get the appointment letter, you have to reject it. You can't accept it. Why? Because it's a reviewer checker concept. Are you understanding? Maker checker concept. That you are reviewing it. How can you check it? You are internal auditor. If there is any deficiency in your work, you will never say that yes, you will never write that in the observation. Are you understanding? Internally also you are doing it and externally also. No, not that. Did you understand these two concepts, dear student? Please write to me in the chat box. It is important for you to understand. What do you mean by that? Kambira? Ma'am, even one branch to another? See, it is not branch, it is the bank. If you have taken bank from one bank, say SBI, one branch you have taken, that does not matter. The SBI audit you cannot take. Any other branch also, if it is assigned to you, you cannot take it. Are you understanding, Kambira? See, even if you have taken from some branch, but there is a loan in your name with that bank. Are you understanding? If you have taken, I gave you the example of Canara Bank, isn't it? Ma'am, if we take some amount of loan from any bank, then we can't do audit of that bank. Yes, Archer. If you have taken loan from SBI, you can do audit of Canara. But if you have taken loan from Canara, you cannot do audit of Canara. Are you understanding this, dear student? From that very bank, what may be the branch, it does not matter. What may be the branch, it does not matter. If you have an account in that bank, it is fine. If you have any account, suppose you are holding account, you are an account holder in Canara Bank. You can accept the audit of Canara Bank, no hassles about it. It is only you cannot take loan. You are not indebted to the bank. Are you understanding? Is it clear to all of you? Is it clear now? If you have taken any loan from any branch of that bank, okay, I say Connaught Place, you get audit of say uh, Kamla Nagar branch. Okay. So any other branch also you cannot accept if it pertains to that very bank. So if SBI you have taken loan, you cannot accept audit of SBI. Okay, if you are internal auditor of SBI, you cannot do the statutory audit of SBI. For some other bank, you can do. If you are internal auditor of SBI, you can accept appointment of Canara Bank, PNB, UCO, BOB, any bank. Okay, all right. So these 2 points are clear to you all. Okay. So number 1 was declaration of indebtedness. The RBI has advised that the banks, before appointing their statutory central or branch, I told you there are 2 kinds of audits: central statutory auditors and branch auditors. Okay. So should obtain a declaration of indebtedness. There is a declaration that you have to submit while you are submitting your appointment. Okay, that yes, you do not owe any money to the bank. It refers to a situation of owing money to the bank in any case. Okay, all right. Then internal assignments in bank by statutory auditor. The RBI decided that the audit firm should not undertake statutory audit assignment while they are associated with internal assignment. That means if you are internal auditor, you cannot take the statutory audit appointment. Okay. During the same year, yes, suppose last year you had concurrent audit, you are over with that. Now this year you can take. But if this year you are internal auditor, you cannot take the statutory audit this very year. Okay? All right. Then, internal of the bank conducted, internal auditor are banks audit which are conducted monthly. This I told you. Concurrent is monthly and statutory is annually. Okay. Then, see, there is a section 144 in your Companies Act which gives you certain services that you cannot provide. So there it is regarding the self-review threats. We will do these threats in chapter number 11. Okay. But as of now, you just understand if you are internal auditor, you cannot accept the statutory auditor, statutory audit of that bank. Okay. All right. Next is planning. You have to plan your audit. Huh? Standards on auditing 300 requires planning and audit of financial statement. That requires that auditor shall undertake the following activities prior to starting an initial audit. If you are doing the audit, we have done the preliminary activities. You have done in your previous chapters preliminary activities, isn't it? Where you had to specify about the significant matters, ethical requirements, capability and competence of uh, the client that you or the engagement team that you are going to appoint, isn't it? Integrity of your client. SA 220 we will do. I don't think you have done SA 220. You will do it in your last chapter. SQC 1 and SA 220 you do it in the last chapter. But as of now, just try to understand, okay, that you have to plan, you have to perform the procedures required by SA 220, that is quality control of audit work. Okay, you have to check the quality of the work, integrity of your client. Okay, they say quality control of audit work regarding acceptance of client relationship and specific audit engagement. See, before you accept some client's work, you have to see the integrity, whether they are of that values that you accept their audit. They do not belong to some criminal groups, they do not belong to some don kind of people, that they will give you they will show you a knife and they will say you have to do the audit as per our wishes. No, because your independence will be hampered, isn't it? So you have to check all these things. So that we will do in the later chapter, but as of now, just try to understand that you have to see to the compliance of SA 300, that is, you have to plan the audit. SA 220, which is regarding to the balance sheet and profit and loss for the year. This. Are you all understanding this? So that signifies the engagement. What is the your nature, scope and extent of work that you are going to do as an auditor? You are going to see to which books of accounts. Okay, this you write in your engagement letter, where you also take the written representation or the responsibilities of the management is given there, that the responsibility of the management is to prepare the financial statement and follow the accounting standards. You as an auditor will follow standards on auditing. AS is followed by one who is preparing the accounts, and who prepares the accounts? Auditor or the management? Management. The financial statements are prepared by the management and audited by the auditor. Isn't it? So whosoever is preparing the financial statement has to follow the accounting standards. Okay, he has to follow Schedule 3. Okay, so all these things are mentioned in your essay 210. So what three essays you have to take into consideration? 300 regarding planning, 220 regarding quality control, and 210 regarding your engagement letter. Okay, the next important point is communication with the previous auditor. Very, very important. Mark, underline it. Clause 8 of part 1 of the first schedule. Clause 8. See, there are professional ethics. You have two parts. Part 1, part 2. Sorry, you have two schedules. Schedule 1, schedule 2. There they are 1, 2, 3, 4 parts. Okay. Their part says what are the conduct or misconducts of members in practice. What are the conducts and misconducts of member in services. There are specific scheduled. So that says that clause 8 of part 1 of the first schedule. There are two schedules. Schedule 1 and schedule 2. So the first schedule, we say it first and the second schedule. First schedule, part 1, and there you have clauses. Okay, so the 8th clause of that part of that schedule, it says that a CA before acceptance of the audit assignment, he has to communicate to the prior auditor that auditor, I have got audit appointment letter from this bank of this branch. Please kindly state to me, is there any reason as to why I should not accept this? Like you do in your normal audit also. I told you that before accepting an assignment, you have to seek permission from your previous auditor before acceptance. It is not that you have given the acceptance and then you are asking. No. Before giving your acceptance, you have to communicate with the previous auditor. Why? Because he will tell you that no, do not accept this. They have not given me fees. They have withheld my fees. There is a fraud going on in there. So I have resigned. I did not do their audit. So you get to know some insights of the client. Okay. So it says that first schedule up to the Chartered Accountants Act 1949, a chartered accountant in practice cannot accept position as an auditor previously held by another chartered accountant without first communicating with him in writing. Verbal, no. You can't call him and say, sir, I've got the appointment. Can I accept it? Please let me know. Is there any reason why I should not accept it? No. Written means either you write, you mail, you post it, or email is fine. Writing through mail is also fine. Okay, it is a written communication. Why? Because you mail it, it is an evidence. It is a written evidence that you have mailed it, and he has to revert via mail. So he should get a NO objection, that is no objection certificate from the previous auditor through this communication as to know whether he has any objections to such appointment date for any valid reasons. Is this point clear to all of you? Anyone, any doubt in this? Please ask me. Ma'am, what if previous auditor is not supportive? What do you mean by this, Golti Anil? Means he's not replying you back. What do you mean to say by this, Golti? I did not get your question. Is not supportive. Supportive in what terms? He is not replying you back. See, if he is not replying you, you will mail back to him again. You will try to call him and tell him that, sir, I have mailed you. Please revert to me. Okay, so this no objection is important. Collusion with the management, no, Golti Anil. No. Auditor will not collude. No, there cannot be any collusion here. Golti Anil, please try to understand. You are, after all, an auditor. Okay? No auditor will collide with the management and will tell you, yes, you accept if he has not received the fees. This much faith you can. I mean the previous auditor, ma'am.
Progress.
Okay? Ma'am, what if the reason that previous auditor is supposed to not give NOC? Ma'am, what would be the reasons that previous auditor is supposed to not? Kambira, I'm not able to get your question. Why will he not give you NOC? He will give you. If he tells you that don't accept, you will not accept. Okay, will you like to accept the appointment of a bank where there is a fraud or there is a material misstatement to an extent? Tell me. See, had it been, first of all, had it been any kind of such fraudulent activity, that bank must have been firstly debarred only. Okay. So usually what happens, I tell you, in practical life, what happens, suppose we get the appointment. We write to the previous auditor, sir, state if there any reason as to why I should not accept this appointment. And the previous auditor, he writes that there's no such observation. I do not object to it. You may kindly proceed. Because see, these matters are taken to a altogether serious level. If there is any kind of such matter, that bank will not be given to you at the first place. Are you understanding? So usually in case of bank audit, it does not happen. But still, as a norm, you have to write to the previous auditor and obtain NOC. Yes. But ma'am, how will we communicate with the previous auditor? Whom is the auditor supposed to ask? Daksh, Vikram, understand. When you get the appointment, when you get the sheet of the list of the bank or the branches which you have been allotted, the name and email address or the telephone number of that previous auditor is mentioned there. Daksh, are you understanding? Ma'am, have you done any bank audit in practice period? Yes, Achal. See, I will not tell which bank. Why these questions coming up? Daksh, what happens is that when you get the list of the branches, suppose maximum first, earlier we used to get 3 branches. Now we get just 2 branches. So what happened when we get the list of the branches we allotted to us, adjacent to that we get the name of the previous auditor along with his email address and the mobile number. Okay. So you contact them. Is it fine, Daksh? Okay. All right. This is of your least concern, which branch or which bank does I audit or something of that sort. Okay, please concentrate on your content. I'm telling you all these things with my own experience. Okay, all right. Now, terms of audit engagement. SA 210, terms of audit engagement requires that each period to be audited, the auditor should agree on the terms of the audit engagement, like SA 210, okay? before beginning the significant portion of field work. It is imperative that terms of engagement are documented in order to prevent any confusion as to the terms that have been agreed in relation to the audit and the respective responsibility of the management and the auditor at the beginning of the audit assignment. So when we go for the audit, we take the engagement letter, we get it signed by the manager. Okay, that these are the terms of engagement. Okay, are you all understanding? Next, initial engagement. Why initial engagement? Because last year either it was unaudited or it was audited by a previous auditor. So it is initial engagement. So SA 510. What have you to check? The opening balances. 510 initial engagement, opening balances. So the auditor concludes that the opening balances contain misstatement which materially affect the financial statement for current period, and the effect of the same is not properly accounted for and adequately disclosed. The auditor should express a qualified opinion or adverse opinion as appropriate. Are you understanding? If in case of initial, it has to be initial engagement because every year the auditor keeps on changing. Okay, all right. Okay, so initial, either it was unaudited or it was audited by a prior or a previous auditor. So if you check the opening balance and then you find material misstatement there, so what will you give? Because that amount is going to affect your current period audit also. So you're going to give a qualified opinion or adverse opinion. So see, you have to give long form audit report. Also, you have to give your independent auditor's report. So this independent auditor's report, you will give a qualified opinion. Basis for qualified opinion. Okay. All right. Then assessment of engagement risk. What was engagement risk? I had told in the last session I told you that the auditor might get a bad name if he audits this because he did not do it properly. Okay, so what was engagement risk? Any one of you remember what was engagement risk? The risk that the auditor will suffer some kind of financial loss or damage to their reputation. Okay, in connection with the audit of bank's financial statement. So that is called engagement engagement risk. So assessment, you will assess, isn't it? You will assess whether there is any engagement risk. If I if I get done the audit of this bank, will I get some bad name, some defamation? Okay, so the assessment of engagement risk is a critical part of the audit process. We had dealt in the previous session engagement risk, specific risk, isn't it? Pervasive risk, all this we had discussed. Engagement risk. The size and composition of engagement team would depend upon the size, nature and complexity of the bank operation. Obviously, if it is a small bank means less advances. So you will take fewer members. If it is a huge bank having crore, big values of advances. So you will take a bigger team so that work can be divided and you can get your audit finished with quality time within quantity, within see, you have limited time to perform the audit. You just can't go to the bank and spend 10 or 11 days there. No. You have to decently do an audit 3 to 5 days or 6 days if it's a very big branch. Okay, so this is how you have to conduct your audit in a limited time period. So then you take staff accordingly depending upon the complexity of bank's operations. Suppose they deal with agricultural advances or they deal in foreign exchange transactions. So all these things you have to take into account. Okay, then understanding the bank and its environment. What was SA 350? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. So here also you will try to understand the risk of material misstatement through understanding the bank and its environment. Okay, so it lays down that the auditor should obtain an understanding of the bank and its environment, including its internal control, sufficient to identify and assess the risk of material misstatement of financial statement, whether due to fraud or error, and sufficient to design and perform further audit procedure. Because based on this examination only, you will assess how much procedures to be followed. Further audit procedures, you will perform test of controls, you will perform test of details, and you will assess what kind of risk is there. Are the controls weak? You will increase the audit procedures. Are the controls effective? You can reduce the audit procedures. So all your concepts of audit will apply. Okay. Then, understanding the bank and its environment, including internal control. You have to understand the internal control. And how will you do that? And understanding what will the understanding of internal control, the auditor, it enables the auditor to identify the assess risk. Identify and assess risk. Develop an audit plan. Only when he understands the control, when you take up the test of controls, you understand, okay, are the internal controls properly designed, implemented, and maintained? Isn't it? Then identify and assess the risk. Develop the audit plan so as to determine the operating effectiveness of controls. Are the controls operating properly or they are just for the namesake? And address the specific risk. What are specific risks? That pertains to an item of balance sheet. Okay, suppose they say there are no controls over debtor. Okay, the debtors, there is a risk of material misstatement. Specific risk, debtors. This element of financial statement has material misstatement. Why? No controls over debtor. Who is receiving the money from the debtors? Who is accounting for the same? Are the reminders sent to them in case of default? Are the schedule being maintained? Are the provisioning being done? There is absolutely no controls. Okay, so this you will be able to assess. Is it clear? Are you able to understand this much? Anyone, any doubt, please let me know. Is this much clear to all of you, dear students? Are you able to understand what bank audit is all about? See, I can understand. It is a new chapter. It is a new concept. And see, bank audit is not just a chapter. It is altogether a different field that you explore. So there are n number of things in bank audit, but for your level, for your understanding at your intermediate level, what you are supposed to know about bank audit is this. So are you able to understand what I'm trying to explain to you? Ma'am, terms of audit engagement, explain once. Terms of audit engagement. Achal. Point number 5. Okay, terms of audit engagement, that is SA 210. Someone else also has doubt in that. Achal Singh. Okay, yes. Terms of audit engagement is SA 210. What are the terms you have to mention in your engagement? That what is the nature and scope of work that you are going to do? Before starting the work, you will tell the client, I am into audit work. Okay, I'm not reviewing. I'm not giving related services. I'm not compiling. I'm not doing projections for you. I am auditing for you. So, audit of what? Financial statement. That includes your balance sheet, your profit and loss. Okay. Then, of what period? Of 31st March this year. And what are the terms? Management, please give me the details that you have prepared the financial statement as per Schedule 3, following the accounting standards. Okay, so these are terms of audit engagement that both the client and the auditor agree to one term. 210, I ask my students to remember, like, how do you remember 210? Two people agreeing to one term. Auditor is saying, I will do this. Management saying, I have done this. So, it is a mutual understanding between auditor and the management that management has done this work, auditor will do this work. Management's responsibility is this, auditor's responsibility is this. And this is the term on which we are agreeing to carry forward with our appointment. If you agree to this management, I will proceed with my audit. Otherwise, I will not accept. Ma'am, in exam, all the points only write or need to explain inter points for initial consideration. See, Mehek, good question. If it comes to, in the exam, initial consideration, you have to write the point and explain 1 or 2 lines. That's it. For example, first is declaration of indebtedness. You will write that it is advised that before appointing your appointment as statutory auditor, auditor should obtain a Declaration of indebtedness. Okay, indebtedness, what is it refers to? That you do not owe any money to the bank. So just 2 lines, you write the heading, explain it to more than 2 lines, it is not required only. Are you understanding? If it comes for say 5 marks, so you will give 5 to 6. Please, if it comes for 5 marks, at least write 6 to 7 points. Okay, at least 6 to 7 points. Anyone else? Achal, is this clear to you now? The point number 5, Achal? Okay. Anyone, any other doubt up to what we have done? Any, ma'am, if auditor's spouse who owns money to the bank, is that indebtedness? No. Okay. Anyone else? Any doubt? Okay. Can we proceed? Is this much clear to all of you? Can we proceed to the other points? All right. So now, internal control we have done. Then understanding the bank's accounting process. How does bank prepare its accounts? So they say the accounting process procedure produces financial and operational information for management's use, and it also contributes to the bank's internal control. Thus, understanding the accounting process is necessary to identify and assess the risk of material misstatement, whether due to fraud or not, and to design and perform further audit procedures. They say that auditor, you need to understand the accounting procedure, what they are doing. For example, they have prepared their balance sheet and profit and loss. You as an auditor, you will check whether the balance sheet and profit and loss are correctly prepared or not. Suppose there is any liability or any liability shown in the balance sheet that the amount you are not satisfied with, when you are asking for its explanation, you are not getting sufficient and appropriate audit evidence. So what will you do? You will see that the liability creditors, suppose there is some kind of okay, liability, I say some deposits only. You are not able to understand from where this bifurcation of deposit has come or this amount of deposit has come. So you are going to ask. And if you are not getting any sufficient and appropriate audit evidence, what will you do? You will say not proper control has been exercised on this specific element. So what will you do? You will increase your audit procedures regarding that. Okay. For example, in their liabilities, they have shown some kind of uh, sundry liabilities they have. So one particular provision you are not able to understand from where this figure is coming. You are saying there is a weak control over this, and if the control is weak, what will you do? You will increase your audit procedures. So you know, okay, if this is not sufficient, I have to do further audit procedures. So you will accordingly apply and perform further audit procedures. Okay. Then understand the risk management process. What is the risk management process? Basically, okay, you tell me what is the risk that bank has. There must be some risk, and it has to be controlled. For every risk, you apply control, you perform some kind of control. So what is risk? What is risk to the bank? Anyone, any guesses? We had discussed in the previous class what can be the risk that a bank is prone to. Anyone? Please write to me in the chat box. We had discussed in the last class. Risk I'm talking. Achal, it is not statute, it is constituent. Achal has written, if statute does not pay loan amount on time. Achal, it is not statute, it is constituent. Okay, the borrower. Statute is law. Okay. Yes. You have written it correctly, but the term is not statute. Statute means law. Okay. Statutory requirement is as per law. Ma'am, methods by which fraud might happen by bank personnel regarding account balances and disclosures. Okay, I tell you. Achal, you have written correctly, beta. See, what happens, but the word, I tell you, the terminology is wrong. Okay. What happens, the basic, biggest risk that the bank is prone to, that the bank has given loan to someone, there is an advance, and the person, the borrower who has taken the loan is unable to repay the loan. So then what happens? It becomes NPA, it becomes a non-performing asset. So what kind of control can be exercised over it? There should be segregation of duty. When we say segregation of duty, see, in bank what happens, basically there are two kinds of offices, front office and back office. Front office is what? You go to the bank, someone sitting at the counter, a very uh, ma'am, key risk is people falling to pay loan. Yes, Gold Channel. Now, please let me explain. Stop writing in the chat box. Just try to understand what I'm saying. Front office and back office. What happens in the front office? You go to the bank, you see someone very smart sitting over the counter, and then you say, sir, I want to apply for loan. So, front office is the place where borrower directly deals and says, sir, I want a loan. Then what does he do? He say, okay, loan sanction. No, it doesn't happen that way. It goes for approve. That person who is sitting at the front office is separate from that who approves the loan. He pass on your application of loan to the person who will approve it. Okay. So this approval person is someone else. Suppose you want a loan of say 15 lakhs. Okay. But due to some constraint or whatever security you have, your limit could be only uh, 12 lakhs. Okay, you cannot get more loan more than 12 lakhs. Then what will you do? It was the limit fix. Now you want to get this approved. Sir, please get it approved. So there is an exception approval person. Exception means excess of the limit. Okay, if the limit is fixed and you wanted excess of that limit, so there is an exception approval also. Then you have to mortgage some other property also. So this all work is done by at the back office. Front office is the person sitting on the front, prima facie, who you come in contact with, where the borrower directly deals. But all these things are happening at the back office. Sanctioning, approval, seeing to your documents, seeing what amount of loan can be sanctioned to you, margins and everything, what security you give, that valuation of the security. So there are n number of things that has to be seen in loan. It is not just you go and ask the bank, I want loan, and you are sanctioned with the loan. No, it doesn't happen that way. It takes few time. So this is a segregation of duty where one person talks to you, he consults his senior and says, sir, is it approved? So he will say, I will get back to you. Immediately he doesn't say something to you. He always gets back to you. Why? Because the people at the back office, they do some calculation, they do working of your papers, they ask for your documentation, they ask for your balance sheet, your PL, or uh, in case of term loan, they ask for your projections. So they ask for it. So there are lot many documents required, valuation, verification of those documentation. It is done at the back office. So the risk has to be controlled. And how can it be controlled? Through segregation of duties. Okay, it is not that with these controls you are able to just mitigate the risk, but still the risk exists. It might be possible that even all these controls, the borrower defaults at repaying the loan. It might happen, isn't it, that in spite of all these controls, the borrower is unable to repay the loan. So yes, they check CIBIL score also. So Achal, very good. Your credibility, isn't it? So all these things are taken into account. So this is what they are trying to say, that you have to understand. What have you to understand? See, understanding the risk management process. How is the risk being managed? So as an auditor, you will see that whether controls are being taken to mitigate the risk, whether controls have been established in the system of the bank. Okay, so let's check. Management develops control and uses performance indicators to aid in managing key business and financial risk. An effective risk management system in a bank generally requires the following. What does it all require? An oversight and involvement in the control process by those charged with the governance. So these TCWG, who are the TCWGs? The board of directors, the managing director, they should approve written risk management policies. There should be a risk management policies in the bank. There's a committee also formed which sees to all these things. So they have to approve this policy. The policy should be consistent with the bank's business objective and strategies. Whatever business the bank has, capital strength, management expertise, regulatory requirement, the statutory requirement which it has to fulfill, and the types of amount of risk it regards to acceptable. Means what risk? I told you last time that you go to a certain branch, they say that we can only disburse loan up to this much limit, 20 lakhs. Our limit is 20 lakhs. Above 20 lakhs, you have to go to the loan branch. So all these segregation has to be done. So oversight and involvement in control process by the higher management, that is those charged with governance. Identification, measurement and monitoring of risk. What is that? As an auditor, risk that could be significantly impact the achievement of bank's goal. What is the bank goal? To advance and take deposit. Okay, so this loan should be identified, measured and monitored against pre-approved limits and criteria. What are the limits that bank, to which limit can the bank approve? So as an auditor, you have to identify what is the limit. You have to measure and you have to monitor that whether these risks have been taken care of or not. Then comes control activities. What are control activities? The controls that you exercise to mitigate the risk. The controls that you exercise to mitigate the risk. See, what have they written? The bank should have appropriate controls to mitigate the risk, including effective segregation of duty, particularly between front office and back office. This we had discussed. Accurate measurement and reporting of positions, verifications and approval of transactions, reconciliation of position and results, setting up limits. What limit can be given? Then reporting and approval of exceptions. I told you approval of exceptions, for example, uh, you need 15 lakhs, 12 lakhs, 15 lakhs, but only 12 lakhs can be given to you. So this exception approval, if again extra 3 lakhs has to be given to it, it has to go to the exceptional approval. Okay, so this is exception approval. Physical security and contingency planning. All right. Then monitoring activity. What do you mean by monitoring activity? Risk management models, methodology and assumptions used to measure and mitigate the risk should be regularly assessed and updated. This function may be conducted by independent risk management unit. I told you there's a committee, risk management committee, who will see to all these things, whether risk management models, what methods are they applying, whether measures have been taken to mitigate risk, are they being updated. Suppose there is a software to detect some fraud, but now what happens, it is outdated, it is not updated. So you have to see that whether it is updated or not. Okay, for example, the cameras in the bank are just for namesake. A fraud happened in the bank, somebody ran away with lakhs of rupees, and the camera, you say, okay, where's the camera working, let me see. Oh, camera not working. It is just to threaten the people. How many times you must have heard ATM scams being done? You know, money getting stolen from ATM. The camera, it is of no good use. It is not able to see who's there. So are these controls working also or not? Okay, so all these things you have to take into consideration. Then engagement team discussion. We had discussed this in detail in the last turn, isn't it? So the engagement team, who is going to perform what experienced people are you taking? So engagement team should hold discussion to gain better understanding of banks and its environment, including internal control, and also assess the potential for material misstatement. What could be the potential? Like what we do is, before going to the bank, we sit with our engagement team. We discuss with them. See, these are the areas. This area in the balance sheet is prone to risk of material misstatement. Specific attention to this should be given. This advances, specific attention should be given. So all these things you discuss as an engagement team. Okay. Next, Establish the overall strategy means now you are planning the audit of financial statements. So state the objective of the auditor. What is the objective? To obtain a reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error, isn't it? So objective of the auditor is to plan the audit so that will be performed in an effective manner. For this purpose, engagement partners should establish the overall strategy prior to the commencement of audit and involve key engagement team members and other appropriate specialists while establishing the overall audit strategy, which depends upon the characteristics of the audit engagement. What kind of engagement you are getting, it depends upon that. There. Is this much clear to all of you? Please let me know. Is this much clear to all of you? Okay. All of you have understood? All of you have understood this? Okay. Can we take a break of say 8 minutes? It's 7:21. We meet around 7:28. Will it do? Or 7:29? 10 minutes break. Okay. We meet at 7:30. Okay. Is that clear? 7:30, is that fine? Can we meet at 7:30? Okay. All right. Technical team, we are taking a break and we will come back at 7:30. Can we start? Okay, all right. So, coming to develop the audit plan, SA 300. What is SA 300? It deals with planning. So, they say it deals with auditor's responsibility to plan and audit of financial statements in an effective manner. It requires the involvement of all the key members of the engagement team while planning the audit. So, now you have to develop the audit plan. You audit the audit planning memorandum. What is audit planning memorandum? It is a summary of your plan. Memorandum is like a summary. Whatever planning you have done, you just maintain a summary. So the auditor should summarize the audit plan by preparing an audit planning memorandum in order to what? Describe the expected scope and extent of audit procedures. Now, since the planning is done, now the auditor will write in that the summary that this is the scope of my work. These all things I'm going to check. This is the extent of my audit procedures to be performed by the auditor. He will highlight all significant issues. Like I told you, we discussed with our articles that see this is the area where special attention is to be given. So significant issue and risk identified during their planning. When they were planning only, they got to know that these areas they require special attention. And risk assessment activities. Okay, as well as the decision concerning reliance on controls. How much can we rely on the controls? We say that, ma'am, the controls are there, but okay, how much can we rely? Can we rely it blindly? No. To substantiate it that the controls are effective, we will need to check the same. Okay, we will apply some procedures to check whether they are in place or not. Okay, then provide evidence that they have planned the audit engagement appropriately and have responded to the engagement risk. Huh? Pervasive risk, the overall risk, which the risk that the whole balance sheet, there could be a risk of material misstatement, specific risk, any element of the balance sheet, and other matters affecting the audit engagement. Is this much clear to all of you? All right. Then we will determine the materiality. Materiality is like a benchmark. You decide that, okay, these are the transactions, this amount we fix, that any amount above this will be material. Your SA 320 that you have done in your previous chapters. Okay. The auditor should consider the relationship between audit materiality and audit risk. What is the audit risk? That the auditor might end up giving an inappropriate opinion. He says that the financial statements are true and fair when they are not. This is the audit risk. When conducting an audit, the determination of audit materiality is a matter of professional judgment and depends upon the knowledge of the bank, assessment of engagement risk, and reporting requirements for the financial statements. So all this will determine what materiality has to be set. Okay. Then going concern, SA 570. While obtaining the understanding of the bank, the auditor should consider whether there are events and conditions that may cast a significant doubt on the bank's ability to continue as a going concern. They say this bank is not going to last forever. Okay, it will not continue. Why? Because there are significant events and conditions that are making auditor believe there's a doubt that the going concern assumptions are not. The financial indicators, the operating indicators that you have done in your SA 570 earlier. Okay, all right. Then the risk related to money laundering and which also deals with fraud. Okay, risk of fraud including money laundering. Now, what is money laundering exactly? Money laundering is nothing but you are trying to disguise the origin of your money obtained from illegal process. Means there is some kind of illegal activity that you have done and the proceeds of them. It could be through some criminal activity. It could be some other illegal procedure that you have obtained that money and you try to show it as a legitimate source or a legal source. So the auditor has to check that if the banks have, whether the banks have adequate system to prevent, detect and report these transactions where they think there's a money laundering activity happening. For example, any constituent of the bank, okay, he has obtained some money from some illegal source like smuggling and he has deposited into the bank. So you all know there is an annual information system annual information that the bank obtains, like how much amount was deposited by a constituent during the period, during the entire year. So the annual information statement, it gets with the bank. The bank has all the details, and you must be knowing, or I don't know whether you know or you don't know, to your surprise, let me tell you that even the income tax, okay, it has all the details of whatever money you have deposited in the bank, you have taken from the bank, whatever interest you have earned on the bank. All this is very transparent now. Okay, what happens is, you, if you are a non-CA, okay, and you are a client and you go to your chartered accountant and you ask them, sir, please file my return, the CA will ask you, have you deposited, are there any investments in your name, how much is your bank interest and everything? Sir, nothing. What, do you own any property, do you have any other? They will say, okay, I have two bank account, interest from this is this and interest from this bank is this. Okay, now you will not even get to know that all your income tax portal, under your AIS, annual information statement, it shows all your financial transactions. Okay, it shows what interest you are getting from what bank account, what are your investment, how much mutual funds have you purchased, what shares have you sold, how many SIPs have you run. Everything is there at your income tax portal. With a click, your CA gets all your information. Okay, and then he asks, you said, sir, there were two bank accounts, but I got to know you have four savings account. Sir, which account, that account? Oh, I don't even remember, I am not using that account. You don't remember, but income tax remembers. Okay, so your laid back, long, sleeping accounts also, they are all visible to your income tax department. Okay, so all the things, they get accumulated there, all your information. So the bank also get to know, oh, 5 crores rupees deposited by this constituent. Okay, from where did he get the money? It was some money from illegal process. Okay, so you as an auditor, you have to see that whether bank has system to detect, to identify such transactions, to prevent such kind of transactions, and to report such kind of transactions. Okay, so the auditor's responsibility related to fraud is that, related to fraud in an audit statement, that the auditor's objective is to identify and assess the risk of material misstatement in financial statements due to fraud, and to obtain sufficient and appropriate audit evidence on those identified misstatement, and to respond appropriately. And how will he do that? With the attitude of professional skepticism. He has to be alert. He will ask the question from the bank. Some person, some constituent's account he is viewing from the system, and there he say, oh, banker, oh, please tell me from where is this account, amount coming from. So the auditor has to recognize the possibility of misstatement due to fraud, or any amount of fraud that could have been through money laundering. Is this part clear to all of you? Anyone, any doubt, please ask. Is this point clear? It was a new point, little technical for you to understand. Fatima, the link will be sent to you by the technical team. The technical team has sent some link, Telegram link. Okay? All right. So is this point clear to all of you? It was little technical. I tried to explain in a little simple language, but still if it is not understood by any of you, please ask me again. Is this clear to all of you? Is this point clear? Can I proceed? Please see in the chat box, Fatima. Okay. Rest of you, please reply. Is this point clear to all of you? Assess the risk of fraud, including money laundering. Okay. All right. Okay. Then, coming to assess specific risk. What are specific risk? The risk related to specific items of financial statement. Or that there is a risk of material misstatement related to a certain item. The auditor should identify and assess the risk of material misstatement at the financial statement level. which refers to risks that relate to pervasively to the financial statement as a whole and potentially affect many assertions. Means any specific assertions. What are the assertions? Your account balance, your class of transactions, your disclosures. So if it affects the entire balance sheet, it has to be assessed like that. Then, risk associated with outsourcing of activity. What do you mean by this? If the bank has used outsourcing as means of both reducing cost as well as making use of service of expert. For example, something came to bank and it has outsourced that work. For example, okay, I tell you what happened. When someone comes to take a gold loan, have you heard of gold loan? Have you heard of gold loan? So what happens there? The constituent, he submits his loan to the bank and against gold, sorry, his gold to the bank, and against that gold could be in a form of jewelry also. Whatever jewelry he had some crisis, he has to take loan. So against those jewelry, he gets certain amount of loan. Now, how will you as a, not you, how will the banker get to know what is the value of this gold? You know, the value of gold keeps on rising. 155, 157, isn't it? So what is the exact value? He will call a registered valuer. Some goldsmith, some jeweler, okay, who is a registered valuer with the banker, he will come and he will value that amount of jewelry, and on that will the bank sanction him some loan. Okay, so what has bank done? He has taken help of the expert. Okay, some valuation of the property. How will the banker, the manager know how to value? He will call some valuer. He will value that building or property and then he will get to know from them. So what is bank doing? The bank has outsourced few activities, or they have taken the services of expert. Okay, which is not internally available. Obviously, no jeweler will be working with the bank, no valuer will be working with the bank. They have to take the expert advice. So here, however, a number of risks associated with outsourcing of activities by the bank, it is credentials of the bank to effectively manage those risks. Okay, so it is the responsibility of the bank. Even those risks has to be managed. It is the responsibility. Why? That the report by the valuer, he has to be a registered valuer. Not any jeweler can you call upon and say, please value. No, a registered valuer with a banker only will do it. Is this point clear? Is this point clear? Okay. Then, response to assess risk 330. You know, 315 is understanding the entity and its environment, and 330 is responses to the risk assessed under SA 350. Under 315, you assess the risk. Now, here is your response. How are you going to not react but respond? Isn't it? To the risk. Requires the auditor to design and implement the overall responses to address the unassessed risk of material misstatement at the financial statement level. The auditor should design and perform further audit procedures, okay, whose nature, timing, and extent are based and are responsive to assessed risk of material misstatement at assertion level. Now, see, you must be thinking, ma'am, how much to learn? You need to just know the points and write them in your own words. Can we expect this from you? Come on, can we expect this from you? See, you have to write the heading, responses to assess risk. And what is the keyword? He has to perform further audit procedures related to them. So, if you write the keyword and a statement in your own sentence, it is sufficient. It is good enough for you to score marks. Okay? All right. Now comes stress testing. What is stress testing? It is not about taking some stress. No. It is regarding the software. What happens? There are n number of transactions taking place at the bank. So, if the operations of the bank exceeds the limit, the normal limit which it should usually do. So, is the software competent or capable enough to handle such transactions? Simple meaning is this. This stress is related to stress on the software, not on the individual person or manager or the, yes ma'am, the manager of the bank is very stressed. No. Stress testing is the testing of the software. The software in the bank installed, is it able to handle the stress of huge voluminous transactions? This is called stress testing. So stress testing is software testing activity that determines the robustness of software. How efficiently is the software working? By testing beyond the limits of normal operation. There is a certain limit, and beyond that, can the software take that? Can it tolerate the tolerance level? Okay. Stress testing is particularly important for mission critical software. There's a particular software which is called, you need not to remember this name. Okay. Although it is used for other softwares also. So RBI has required that all the commercial banks shall put in place a board approved stress testing framework to suit the individual requirements, which would integrate their risk management system. You have to just know that stress testing is the testing of the software to check its capacity to take transaction beyond a specified limit or not, or beyond the limits of normal operations. That's it. Is this point clear to all of you? Please write to me in the chat box. See, I fully understand that all these terminologies are very new to you. Okay, but try to understand. You are not, you will not be judged on technical aspects of it. Okay, but yes, you should be knowing what stress testing is. Okay, all right. Next is Basel 3 framework. Very important, and you will do it thoroughly in your financial reporting. What is Basel 3? These are Basel norms on accorded and our international banking regulations. These are international banking regulations. Basel, why name Basel? Basel is the name of the place where this framework was decided, where the system was designed. So it is Basel. Basel is the name of the place. So that is why Basel. No specific reason for that. Okay. So they say issued by BCBS. What is BCBS? Basel Committee on Banking Supervision. There is a committee. Okay. And Financial Stability Board has undertaken an extensive review of the regulatory framework in the wake of subprime crisis. Actually, okay, I'll tell you what the story is about. This Basel framework came into existence around 2010 or so. Why? Because there was acute crisis. The management of the bank were not proper. The regulations, the bank working under regulation, they were not following any policies, they were not following any rules, so it was pathetic. So this regulation came up that bank should have sufficient capital. They should hold with them self-sufficient capital of its own, so that if there is crisis in the markets, the banks are able to absorb the same. Means loans given, they were not able to recover loan, and ultimate disaster was there. So all these crises, to meet these, this regulation has come up that you have to follow this norm. Basel 3, where the bank should have sufficient capital of its own, so that if there is any crisis in the market, it is able to deal with it. Okay, so this BCBS, what do they suggest? They suggest that the minimum criteria for inclusion of instruments in the definition of regulatory capital, means the self-sufficient capital. So here the basis focuses on the risk in the banking and financial system. And what is the risk? That if the bank advances something and the constituent is unable to pay back, it will become NPA. Okay, so that norms, dividing the loan or the account which has become non-performing, how to deal with it. So it focused on risk in the banking and financial statement. So what have you to remember? You have to remember Basel 3 framework, okay, which are based on some regulatory framework, and which says that there should be, it focuses on the risk in the banking and financial system. Only this much is required and expected from you. Is this clear to all of you? Can I consider this as understood, or do you have any doubt? Basel 3. The name, there is no specific reason why Basel was given. It is just the name of the place where this framework was decided. Is it clear to all of you? Please write to me in the chat box. I'm not getting any responses from you all. Okay. All right. All right. Now the last point, that is reliance on review of other reports. So as an auditor, you have to also see and take into account the adverse comments, if any, on advances. Means advances, whatever the bank has disbursed and as loan, advances appearing in the balance sheet in the following. So what have you to check? You have to check the previous year's audit report, so that you have to see, is there any adverse comment on advances by the previous auditor. Okay, so this you have to see, that are there any adverse comments on that. So you will take into account the latest internal inspection report of the bank official. There is internal inspection going with the bank. There is basically a norm, like I told you, the concurrent audit happens and also inspection happens. So this inspector, when he comes to the bank, he gives few closures to the bank to be complied with. He says this is not dealt with properly, this is not dealt with properly. So all these things he has to say that the bank has to still comply. So the auditor will see whether the bank has taken care of all these points mentioned in the closure report. Is this clear? So the inspection report, whatever is mentioned in the inspection report, the inspector will give some observation that this not complied or this is dealt with. So are those complied with properly or not? So what basic things? The previous auditor's report, inspection report, concurrent auditor's report, the internal auditor's report also he will see. RBI's latest inspection report, whatever circulars, whatever instructions are given by RBI, he will abide with that. Report on verification of security, whether the securities have been properly verified or not. Any other internal reports, especially related to particular accounts. Some accounts which have been lagging behind or are failure to repay, some reports regarding them has to be specifically seen to. Then manager's charge handling over report when incumbent is changed. Any other changes he has to see. Okay, so all these things where there is a change, manager has handed over some to other manager, there's a change of manager between, so that things he has to see. So basically previous year's auditor's report, internal inspection report, RBI report, inspection report, concurrent report, report on verification of security, and any other internal reports which are related to particular accounts, and manager's charge handling over report when the manager has handed over the charge to someone else. Is this clear? So the above report should be reviewed in detail. The statutory central auditors must review the annual financial inspection report of RBI related to banks and ensure that the variations in provision etc. reported by RBI have been properly considered by the bank management. So what you have to just know is that other reports, just any 4 to 5 reports you can mention. Is this clear to all of you? Anyone, any doubt, please ask. See, these points are little technical from understanding point of view. I'm trying to explain, but still if you find it difficult or you are unable to, please ask me again. I will explain to you again. You ask me 1,000 times, I will tell you 1,000 times. There is no issue and no hassles about it. Come on, students. Is it clear? Is this much clear? Because now we are going to start altogether a very new topic. So you have to make sure that whatever done till now is understood.
साक्षी मैडम गुड इवनिंग।
राजीव सर वेरी गुड इवनिंग।
और कैसे हो आप?
बिल्कुल
मैं
ठीक
अभी
सर।
आपका पूरा लेक्चर सुन रहा था।
ओके सर।
वेरी वंडरफुल एक्सप्लेनेशन यू आर गिविंग टू स्टूडेंट्स।
थैंक यू
तो
सर।
उनको मैं आपको अश्योर करता हूँ कोई डाउट ही नहीं है स्टूडेंट्स को।
अच्छा।
यस
ओके
यस
सर।
यस। तो बहुत अच्छा
ओके,
आप पढ़ा रहे हो। और
थैंक यू।
स्टूडेंट्स आप अपना जो फीडबैक फॉर्म है वो आप भरा करो। और क्लास के बाद वो आपको मिल जाता है, मुझे बताया गया है कि आपको क्लास के बाद आपको अवेलेबल होता है। एट 9298 आप मुझे कभी भी कॉल कर सकते हो। स्टडी की गाइडेंस, कैसे पढ़ना है, क्या करना है, एग्जाम से रिलेटेड गाइडेंस, कुछ भी आप पूछ सकते हो। एनी सॉर्ट ऑफ गाइडेंस कि स्टडीज को अप्रोच कैसे करें, प्रैक्टिस कैसे करें। तो डिटेल्ड गई अभी इतना बताना कई बार पॉसिबल नहीं होता, क्योंकि बिकॉज साक्षी मैडम का टाइम मैं ले रहा हूँ। तो इसलिए
राइट।
मैं बहुत ज्यादा नहीं अभी आपको समझा पाऊंगा, लेकिन इंडिविजुअल टू वन टू वन बेसिस पे मैं स्टूडेंट्स को गाइड करता रहा हूँ। तो आप मुझे कॉल कर सकते हो स्टूडेंट्स। ठीक है। तो फिर मैं नेक्स्ट लेक्चर में आऊंगा और इसी तरह से 5-7 मिनट साक्षी मैडम मैं आपके जरूर लिया करूंगा बीच में।
बिल्कुल सर, एनी टाइम सर।
ठीक है, आपको भी थोड़ा सा रेस्ट मिलेगा आपकी,
नहीं सर।
क्योंकि बिकॉज ये टायरिंग एक्सरसाइज है, अंडरस्टैंड, इतना इजी नहीं होता बोलना। तो
Maybe, sir, the students are
बीच
really
में
good. They asked out, and the more they asked out, the more eager the teachers are to explain in another way also.
ग्रेट
So,
ग्रेट ग्रेट,
yeah.
दैट्स ग्रेट। चलो तो साक्षी मैडम, आप अगर कोई मेरे लायक कोई स्टूडेंट्स का कोई डाउट है तो मैं भी क्लैरिफाई कर देता हूँ।
Sir, I
और
don't think just the telegram और वो lecture की feedback के
वो
लिए.
मैं नेक्स्ट लेक्चर में बता दूंगा। और अभी के लिए मैं ओके कह रहा हूँ, बाय बाय। और नेक्स्ट लेक्चर में मैं मिलता हूँ।
Thank you, sir. I'm sharing
थैंक
your
यू
number.
साक्षी
I've
मैडम।
just shared your number with them.
थैंक यू थैंक यू।
Okay. Thank you,
थैंक
sir.
यू साक्षी मैडम, थैंक यू स्टूडेंट्स।
Thank you, Rajiv, sir. Thank you so much.
और नेक्स्ट लेक्चर में आप प्रिपेयर होके आना स्टूडेंट्स। आपको क्या क्वेश्चन मुझसे पूछने हैं और मैं आपको और टिप्स बताऊंगा नेक्स्ट लेक्चर के अंदर।
थैंक
थैंक
यू
यू।
सर। थैंक यू सर, इट इज ऑलवेज अ
थैंक यू
प्लेजर दैट आप ज्वाइन करते हैं और कुछ गाइडलाइंस देते हैं बच्चों को और कुछ टिप्स देते हैं। थैंक यू सो मच सर।
थैंक यू थैंक यू साक्षी।
थैंक यू सर।
प्लीज कंटिन्यू।
जी सर। Okay, so now we are going to start. Okay, I was just asking anyone any doubt till whatever we have done, because now we are just going to begin with advances. Okay, so you have to make sure whatever done till now is clear to all of you. Anyone, any doubt, please ask. Or if you feel that, ma'am, we have to go back again, revise, and then get back to you, it is again fine enough. Okay, in the next lecture, you can ask me your doubt. So for that, okay, I'm getting understood. Fine. So we are proceeding towards advances. All right. So coming to advances. Now see what basically are advances. Advances is nothing. I can, okay, I will teach you from here. Is my notes visible to all of you? Please write to me in the chat box. Are the notes visible to all of you? Okay, very good. So see, advances are something the bank, and there are two parties, bank and the borrower. The bank gives money to the borrower, okay, money or credit, whatever it is, with an intention that the borrower agree to pay back the money. The bank is giving to the borrower with the intention that the borrower will pay back the money. Okay, with this good thought, bank advances loan to the borrowers. Now the entire plays this, like I told you, the biggest risk that the bank face is it gives advance and the advance is not repaid by the borrower. So this is the risk, and we all are working to control this risk and to detect this risk. Okay, so the entire bank audit play revolves around advances. Like Rajiv sir told you that advance is the prime area of focus in your bank audit. So this is the area where we need to take special attention. Okay, so you all know what advances. Now, what type of advances? It could be fund based, it could be non-fund based. Now, what are these? Let's check. When I say on the basis of funding, see, advances can be classified on different bases, on the basis of funding, on the basis of sector, on the basis of security. So we are taking funding. On the basis of funding, advances could be either fund based or non-fund based. When we say fund based, what do you mean by that? When there is actual transfer of funds, like there is the term loan, there is cash credit, there is overdraft, demand loans, bills discounted and purchasing. All these things are happening. It is called funded, where actual transfer takes place. Okay, see, like term loan, demand loan, cash credit. Okay, your bank OD, your bills discounted, whatever bills you have done in your accounts, discounting of bills. Do you remember the entry? Okay, staff loans, participating risk sharing basis. These are basically consortium advances that few banks, when the loan amount at advance is that big that a bank, single bank alone cannot fund it. So what happens? 2-3 banks, they get together and they advance that loan. Okay, so that is called consortium advances. Just for your understanding, just understand that when the amount of loan is too big for a bank to sanction it fully, 2-3 banks, they come together and disburse that loan. Okay, all right. Then this is fund based advance. When we say non fund based advance, it does not involve any transfer. It is a mere guarantee or letter of credit. Now, what happens in letter of credit? See, it basically happens in case of export. So here what happens, just try to understand the story. There is a buyer and there is a seller. Okay, first thing what happen is that the buyer contracts with seller. There is a contract between buyer and seller regarding some purchase of goods. So the buyer tells the seller that I wish to purchase this goods from you. Seller is sitting in a foreign country. Or okay, so what happens is this buyer, he requests his bank to open a letter of credit in favor of the seller. Okay, the buyer requests his bank. Suppose the buyer's bank is in State Bank of India. Buyer's account is in State Bank of India. So buyer tells State Bank of India that please, you open a letter of credit in favor of the seller. And seller's bank is say in Bank of Baroda. Okay, so now what happens? There was a contract. The buyer requests SBI to open letter of credit in favor of the seller. Now, the buyer's bank, he sends letter to the seller's bank, that we call advising bank. Okay, seller's bank, advising bank we call it, but understands the seller's bank, that is Bank of Baroda. So he sends this letter of credit to this seller's bank and it acts as a guarantee. Okay, this seller's bank, he verifies the letter of credit and forward it to the seller. Okay, upon receiving this letter of credit, seller, he ships the good, he sends the good, he dispatches the goods and collects the shipping documents like bill of lading, invoice, etc. Okay, and these documents are then presented to seller's bank. The seller is telling that bank, I have dispatched the goods. Okay, and now you forward this to the issuing bank for verification. This documents, you send it to the issuing bank. Who's the issuing bank? The buyer's bank. Okay, so now the seller's bank forward the documents to the buyer's bank for verification, and the buyer's bank release the payment to the bank. Okay, he released the payment to the seller's bank. Now he said, okay, goods dispatched, now I'm giving the payment to the seller's bank. Then the buyer pays and retrieve. Now the seller's bank, he gives it to the seller, and later on the buyer, he retrieves the documents and claims the goods from his, he claims his goods which have been shipped. Okay, so this is the entire story of letter of credit. This happens in case of, basically it acts as a guarantee to exporter, that one who's exporting, he gets certain guarantee that yes, his payment will be made. Okay, so this happens. So this is called type of non-funded. Non-funded where actually the goods or the loan did not take place. There was some kind of guarantee. Okay, this is called non-funding. So let's do it from the material. See, advances are amount of money or credit given as loan from bank to another party with an agreement that money will be repaid. All bank loans are made at interest, which is compensation for borrowing. Why will the bank even give you loan? What do you think actual is the business of the bank? Suppose bank give you loan at say 8%. Okay? And he the bank obtains that loans at a lower rate and asks you for a higher rate. Are you understanding this? This is the margin that bank play with. The deposit rate is always less than the rate at which you take the loan from the bank. Suppose you have a saving account in the bank, okay? And you are depositing and you are getting 6% interest on that savings account. But on the other hand, if you go and ask bank for some loan, bank will give you at a higher rate, 9%. Okay, so this difference is what the bank's profit is basically. So banks, why do you think the bank give you money and then take back? The difference in this interest rate is the exact margin and profit of the bank, where the bank earns. Okay, this is the business of the bank, to take money and give loan. Somebody has deposited crores of rupees, which the bank knows he will not use it for further period, say next 5 to 6 months. And you come today asking for 1 crore. So what will bank do? He will give that money to you. He will circulate that money, pay him at a lesser rate and charge from you at a higher rate. This is how banks function. Okay, so here they say all banks are made at interest, which are compensation for borrowing. Advances generally constitute the largest item on the asset side of the balance sheet of the bank and are major source of its income. In the next class, I will show you the balance sheet of the bank. Okay, and then you will see that the advances are the major item on the balance sheet. Okay. Audit of advances is one of the most important area covered by the auditors in bank audit. Like Rajiv sir told you, it is the prime area where the auditor has to focus on. Okay. It is necessary that auditors should have adequate knowledge of the banking industry and regulations governing the bank. Only then can you go and audit the bank. You should be having knowledge of what are the regulations of RBI. How does bank function? Okay, it is necessary. Okay, then auditors must be aware of various functional areas of the bank and branches. Its process, how does it process? What are the procedure system, prevailing internal controls with regard to advances? Okay, what, like, as an auditor you should be knowing, if the bank is giving some loan, against that loan some kind of sufficient security should have been kept by the bank against which the loan is given. For how much time is the loan given? Okay, so basically what types of loan have you heard of? Can I know from you what kind of loans have you heard of? Housing loan, education loan. Okay, so all these are kind of loan that you must have heard of. Okay, vehicle loan. All right. Okay, what are you writing? Home loan, business loan, car loan, personal loan. Okay, so you all know something about what kinds of loan are. Very good. So we have done types of loan. The very first thing, funded and non-funded. Funded loans are those loans where there is an actual transfer of funds from the bank to the borrower, like bank giving something to the borrower. Okay, fund examples are cash credits, overdrafts, term loan, demand loans. See, I would like to get your attention on two major kinds of loan. That is the term loan and the working capital loan, which is usually taken by the business people. Okay. The businessmen, they actually come for a term loan. What is a term loan? I told you last time. It is for a longer duration for which projections are taken by the bank. For example, I am a businessman and I wish to expand my business, or I want to start a new business. So I go to the bank and I say that bank, I wish to seek loan. Bank will ask me, what business do you intend to do? So I will ask my chartered accountant, I will ask my CA, sir, please prepare a project report stating what business will I do, what are my requirements, how much money will I need, and using that money, what income will I generate from year to year? For example, I take a 10 lakh rupee loan from the bank. How much earning or how much revenue can I earn in the first year, in the second year, in the third year? What will be my profit margin? And by what time will I be able to repay this money to the bank? Number one, term loan. Okay. So you need a projection from your chartered accountant. He will give you projections. When I say projections means your estimated profits of the future years for next 5 years. Okay. So for example, it is 26, 27. You go to the bank will ask you to provide project report. You will give them the balance sheet and PL for 27, 28, 28, 29, 29, 30. Ma'am, how come? On some figure, on some base, if invested in the business, it will recover this much in the first year, it will get this much in the first year, and through that money we are able to repay the bank. So this is called estimation. Working capital loan. What is working capital loan? I told you last time that suppose a businessman wants to invest more into his business in a form of buying more stock so that he is able to sell more. More stock, more sale. So he goes to the bank and he say, I want a working capital loan for my day-to-day operations. Bankers say, okay. Now there I told you that we have to submit to the bank stock statement, debtor statement. Okay. So what security does the bank take? It asks for your inventory or debtors. Okay, and if that is not sufficient, they will ask, okay, this is the primary security. What additional security can you give to me? Then they will say, okay, you mortgage my house also or this place also. So that ways, that we will do later. But just for your knowledge sake, have a little idea of what term loan exactly are. Okay. So, non-funded facilities are those which do not involve such transfer of funds. For example, letter of credit, bank guarantee. See, there is an explanation like I told you, contract between buyer and seller. Then the buyer's banker send letter to the advising bank, that is the seller's bank. Okay. Then what happens? The seller's bank verify it and then forward it to the seller. Seller, he receives the LC and ships the good. He dispatches the goods and collect the documents, shipping documents. Then these are presented to the seller's bank who forward it to the buyer's bank. He verifies it and release the payment to the seller's bank. So all that process happens in this letter of credit. Okay. So what do advance comprise of? Advance comprise of funds amount by way of term loan, cash credits, overdraft, demand loans, bill discounted, participation on risk sharing, that is nothing but consortium advance. 2-3 banks together coming up and advancing a huge amount. Interest bearing staff loans, when some loan is taken by the staff, the members of the branch, the employees of the bank there. Okay. Legal requirements for disclosure in the balance sheet. How do you disclose them in the balance sheet? Bills purchased and discounted, cash credit, term loan, and you have to also mention how are they obtained. You have secured any tangible assets with the bank, you have covered some guarantee, or it is unsecured. Unsecured means no security kept against it. Okay, so all these things you have to mention in your balance sheet. Then classification advances on the basis of sector wise, like priority sector. What are priority sectors? What do you think are priority sectors? Where countries' development is, really at stake. The agriculture, the MSMEs, the education, housing, for the development of the country, the development of the nation. So all these are priority sector which are prime to a nation. To India, what is prime? The agriculture. These MSME, what are MSME? Micro, small and medium enterprises who contribute so much to the economy. Education institutions, the housing facilities. So all these we are covered in the priority sector. So they say the RBI issues common guidelines for lending to the priority sector. The banks are required to lend money to them, to these sectors: agriculture, MSME sectors, education, housing sectors. So all these people, the bank is advised to please give loan to them. Only then will our country develop. Okay. So banks are required to follow these guidelines to cover rate of interest. What do they cover? They cover what kind of interest will each bear. Suppose housing loan is at a different rate, loan to MSMEs at a different rate, education loan has a different rate of interest. Okay. Acknowledgement loan application. RBI also issues target for bank for lending to priority sector. What target? For example, if you are advancing this much, so out of this portion should be to priority sector and this is to other sectors. Okay, so this is the target the bank has to see to. See, RBI guidelines for lending to priority sector. It covers the rate of interest to be charged to these sectors. Service charge, sanction, rejection, disbursement register. How much have you disbursed? And RBI also issues targets. What targets? That out of the total advances of the bank, whatever total loan the bank has given, a certain percentage of it should relate to priority sector. Okay. Anyone, any doubt till now on the basis of funds and on the basis of advance sectors? Yes, Daksh, 2-3 examples are more than enough. You need not to do research on the same. Yes. You should be just having knowledge of what are funded advances and what are non-funded. So like guarantee, letter of credit, all these are non-fund where no actual funds are taking place. Transfer of funds are taking place. Okay, it's a kind of guarantee given. So you should be knowing. For example, in MCQ, if they ask example of a non-fund based advance and they give you cash credit, OD, letter of credit, all of the above. So you should be able to answer that it is letter of credit, non-funded. Are you understanding, dear students? Is it clear to all of you? Please write to me in the chat box. Anyone, any doubt? Are these two types of loan advances clear to you all? On the basis of funds, not fund based, non-fund based, on the basis of sector. Okay. All right. Now, coming to next. On the basis of security, please understand this very properly. On the basis of security, what kind of security are you giving? Security could be either primary or collateral. When we say primary, what do you mean by primary? Suppose I say a person, a constituent goes to the bank for obtaining a working capital loan. What did I say? Working capital loan. For his day-to-day activity, he wants to take loan. Now, the bank will say, okay, give me some security. So the primary security in case of working capital loan will be debtors and inventory. Like I told you, that is why they have to submit the debtor statement and the stock statement to the bank. So the primary security in case of working capital loan is debtors and inventories. Okay, is it clear? Now, the bank manager, he thinks, what if the debtors become insolvent? They are not able to pay and the debts become bad. What if the value of inventory falls? Are you understanding? Suppose the inventory are worth rupees 1 crore, but in course of time, the value of inventory will deteriorate. The nature of the business is such. For example, he's into mm, retail footwear business. Okay. Now, with the passage of time, the footwears, the inventory will decay. It will become obsolete. Why? Because you all know, if you do not use your footwears for 6 to 7 months regularly, the sole of it peels off. You all know, isn't it? So the manager is now afraid. What if the primary security of the constituent is unable, it is not sufficient enough to meet the loan? The debtors become insolvent, the inventory, the value of inventory will fall. What will happen? So the manager tells that, sir, I want a collateral security. What is collateral security? Additional security apart from your primary security. Okay? Additional security apart from your primary security. So now the manager tells the constituent, please, I want some more security. So the borrower says, okay, you mortgage my house. You mortgage my house. So what is this house? It is a collateral security. Did you understand the story, all of you? Write to me in the chat box. Did you understand the story? Did you understand the story? Very good. So now come. Primary security is the principal security, one against which the credit has been extended by the bank, one against which the loan has been given to the constituent. What is additional security? That, sorry, what is collateral security? It is an additional security that can be in any form. It could be tangible asset, it could be intangible asset, it could be movable, it could be immovable. Are you understanding? Okay. So come to our study material. It says security wise. Banks ask security or collateral while lending to assure that borrower will return the money to the bank in prescribed time, else the bank have legal authority to sell the collateral and recover the money. If the bank does not get its money back, it will sell the security and recover the money. Okay, that is why the value of security is more than the amount of advance you have taken. The bank usually give to you only 75 to 80% of the value of security. For example, you mortgage your house worth rupees 20 lakhs. Are you understanding? So the bank will only disburse you 75% of that 20 lakh as loan. Why? Why? Because the bank also knows. Suppose you stay in a flat, the value of flat will deteriorate. So by the time you are not able to give the money, the bank will be able to sell the flat and recover the same. So that, what is that time lag that you call time value of money, which you all have studied? Time value of money, isn't it? With the time, the value of money depreciates. So the bank is able to recover at least that much what it has given to you. Are you all understanding this or not? Okay. So the primary security refers to the security offered by the borrower for bank finance or the one against which the credit has been extended by the bank. This security is the principal security for an advance. What is collateral? It is an additional security. Security that may be in any form, tangible, intangible, movable or immovable. Examples of most type of securities accepted by the banks are personal security or guarantee of people, goods, stock, debtors, trade receivable. That is your current assets in case of your working capital. Gold ornaments and bullion, like I told you, in case of your gold loan. Immovable property like your house. Plantation in case of agricultural advances. If you are taking loan for your agriculture purpose, then the plantation, the proceeds of the agriculture. Third party guarantee. Banks general lien. It wants to hypothecate something. Life insurance policies. Against your LICs also you can take loan. stock exchange security and other instruments. Like if you have some shares, you can, against those shares, you can borrow loan from the bank. Please let me know, is this clear to all, whatever we have done till now? Anyone, any doubt, please ask. But can we only pledge collateral security? Daksh, the concept of collateral comes when your primary security is unable or not sufficient enough to satisfy the lender. As simple as that. Your collateral come when your primary security is not able to satisfy the lender. As simple as that. Okay. Are there no separate provisions for immovable assets as it gets appreciated and movable asset are depreciated while recovering the money? Like if a long-term loan is approved and the collateral security is a movable asset, then at the time of recovering by selling, the value of asset will be less, right? Yes, Daksh, exactly. So it depends upon the quantum of loan that you take, isn't it? If you take loan of a higher value, your immovable property like your land, which appreciates, isn't it? So that the lender will think whether it is sufficient or not. Okay, if you are taking loan keeping your gold jewelry as a security, so the value of gold, we all know how it goes, isn't it? So it depends upon the quantum of loan that you take. Okay, now it is clear to you. Okay, now please let me know whatever kinds of advances on the basis of funds, funded, non-funded, on the basis of security, primary, collateral, on the basis of sector, primary sector. Okay, so is it all clear? Yes, ma'am. Like we have good job, but there may be risk in the job. Then bank asks for collateral security. Okay, Achal. Okay, Daksh, all clear. Others, please respond. Is it clear? Have you understood things till where we have done? The next topic is a mode of creation of security that I will not take it today because it is, I know it is too much for you to absorb also. I will give you some time to absorb, a day's time to sink. Let's sink whatever was taught today. Okay. All right. So is it okay? You all are saying clear, clear. Now the question of somebody asked me a question in the beginning of the class. Responsibility of RBI, I guess. Please, that girl, raise your hand. Or please, I asked. Yes, Achal, please, your doubt. Point number something of legal tender. Because Modi ji could sense that there is some kind of money laundering activity or there are some illegal activity happening with these big amount of notes. So RBI in conjunction with the central government, in consultation with RBI, both of them, can RBI say no, as per Modi ji it is a non-legal tender but we were going to issue it, it is a legal tender for us? No. So RBI in conjunction with with Modi ji or central government will take such policies, fixing the rate of interest, reducing the rate of interest, increasing the rate of interest, what has to be taken as a legal tender, what has to be stopped as a legal tender. All these policies will be taken up by RBI in conjunction with central government. This is also a responsibility of RBI. Achal, is it clear now? Okay. Mehak is asking, reporting to RBI, what the question comes in exam? I am not able to understand your question, Mehak. Reporting to RBI, are you asking me in relation to the fraud? In relation to the fraud, Mehak, what we did today? Yes, Mehak, please, a technical team, please unmute Mehak. She wishes to ask something. Technical team,
Yes, ma'am.
please unmute Mehak. She wishes to ask something, some question.
Okay.
See, students, if you think that you want to speak and ask your question, is
Am,
perfectly fine.
am I
Yes,
audible,
Mehak.
ma'am?
Yes,
Am I
Mehak, you are
audible?
very much audible. Yes, Mehak, audible.
Ma'am,
Please ask.
in reporting to RBI, as you said that there is a point that finds anything susceptible, 1 2 3 point. Ma'am, there is a question how comes in exam.
You are trying to ask me what kind of question can come in the
Yes,
exam.
ma'am. Yes, ma'am.
Okay.
From here.
A question like reporting to RBI with respect to frauds. What is
Okay.
auditor responsibility for fraud that it has to report? Okay. So
Okay.
there you have to say that as an auditor, as a professional, you have to report regarding anything susceptible to fraud, any kind of fraudulent activity, any smell of any foul play in the transaction, or if the bank has acted in excess of its power, he should refer these things to the RBI.
There is
So it
no,
is
ma'am,
the
only right.
responsibility of the auditor. Yes.
Ma'am, only there is a 3 point. We write put 3 points only.
Yeah, 3 to 4 points. One is
Okay.
susceptible to fraud, the other is fraudulent activity, third is acting in excess of the power, and fourth is smell any foul play in the transactions. So there are
Okay,
four
ma'am.
points. Okay.
Okay. Thank you, ma'am.
Okay. Good. Anyone else any doubt regarding how to write the answer or what form of question can come? Is it clear to everyone? See, you have to go back and revise things. Only then can you ask your doubts, isn't it? Okay. So, can we call off for the day? Can we wind up for the day? Okay. So, till then, till we meet next, good night. Take care. God bless all of you. Thank you, all of you. Technical team, thank you for your constant support. And good night.
Yes, sir, over, ma'am.
Yes, sir, it is over.